right, everybody. Thank you for joining. So just a little bit about Envision blockchain. Envision blockchain builds applications for the Web3 space, and we focus on guiding organizations through three major milestones on their Web3 journey: use case analysis, proof of concept development, and scaled deployments. Envision blockchain are the builders and the maintainers of the Guardian. Quick overview about the Guardian. The Guardian is going to take kind of center stage over here in this presentation. Today, the process of designing and collecting the supporting data for carbon claims, it's manual, there is prone to errors, there could be poor data quality, lack of assurance, there's issues with double counting in the space, greenwashing is in the news, there's an overall lack of trust. And that's where the Guardian, as you can see on the right, it leverages something that we call a policy workflow engine that really addresses the issues to the current processes. And this dynamic policy workflow engine, it's designed to be super flexible so that it can mirror the standards and business requirements of regulatory bodies and standard bodies to be able to create extremely flexible digital methodologies, also known as DMRV. And as you can see on the right-hand side, that screenshot, it's a screenshot of the policy configurator that we have within the Guardian. And you can think of a policy, we're going to say policy often, and think of a policy as a coded version of a methodology. It's the digital version. You can use policy workflow blocks like Legos essentially to design your desired workflow. This resembles something almost like a BPM tool. And the Guardian, it's a solution that's leveraging the Hedera public distributed ledger, and it's used to mint emissions and carbon offset tokens. It provides auditable, traceable, reproducible records that document the process and life cycle of digital environmental assets, such as carbon emissions you can tokenize, and carbon offsets and renewable energy credits, which all of this, when you combine, reduces fraud in the ESG markets. And in particular, this Guardian solution, from a technical standpoint, it really takes some of the state-of-the-art technologies that are out there right now as far as digital identity with decentralized identifiers built from the W3C standards, DIDs, and verifiable credentials and verifiable presentations. And just like I mentioned, it's leveraging public ledger technology. What you see on the right-hand side is something that we call the trust chain. And the trust chain is what you can use to really traverse all of the actions that led up to the minting event. So when an offset is created, you really want to be able to understand the quality that stands behind that offset, or that renewable energy credit, or that emissions token, essentially. So what we're looking over here is, again, the trust chain, which is the series of steps and actions and entities and identities of who submitted, what they submitted, when they submitted. And of course, because we're leveraging the Hedera public ledger, everything is discoverable and everything is auditable. Just really quickly, I'm not going to spend a lot of time on this, just to let you know about the Guardian release history, where we came from and where we are today. The initial release happened in October of 2021. So we've been working on this together with the community for a little bit over 2.5 years now. It's been a really great experience where we wanted to start as just an MVP, build a front end so that it could be used through a user interface. But we also wanted to make sure that companies can build their MRV applications on top of this. So this really is an API product. And we had different features such as message brokers and different components and policy workflow engines that we needed to keep improving. And over the time, adding API stability and being able to import policies and publishing policies in different versions. Later on, we understood that there needed to be a need to support complex policy workflow blocks like calculation blocks and aggregation blocks. And we need to enhance the usage of verifiable credentials and verifiable presentations. We introduced event-driven workflows, and we provided features like dry run operations and multi-user roles and multi-sig approvals. Currently, in the past couple months, we really made a push towards production readiness with the latest release, which will be March 31st, is going to be Guardian version 211, add support for retirement that actually came out a couple months ago, multi-policy tokens, disaster recovery, policy differentiation tooling, which is going to be part of the presentation today, enhanced policy creation. You'll see some of that refreshed UI a little bit later, and again, improved production readiness. So again, just last slide over here about the Guardian. There's two versions. It's open source as always, so it's available to fork and use immediately. github.com/hashgraph/Guardian. Feel free to use it. If you need any help, our team is standing by to really help you out. And for those that also want to take a look at the Managed Guardian service, which is our offering, it is the SaaS version of the open source Guardian. It's a hosted environment with all the SaaS benefits like multi-tenancy and a reliable cloud infrastructure, and the ability to have a scalable infrastructure with auto scaling, really providing a production ready infrastructure for methodologies that require heavy MRV data streaming. But with that in mind, I want to pass this over to Jaylene Molina, who's our ESG consultant, and she's going to go into the presentation today.
Hi, everyone. Thank you for joining. I'm the ESG consultant here at Envision Blockchain, and I'm looking forward to share some information with you on policy creation and Managed Guardian service. So now that we've discussed Guardian and its benefits, let's go over how we develop policies based on a methodology. Developing policies is a crucial step in implementing any methodology, as it ensures that the intended outcomes are achieved and sustained over time. We developed a checklist that can break down each step that is taken from the very beginning all the way till when you build a policy for Guardian. So let's walk through these. Step one is to figure out what type of credit you'll need. Is it a VCU, which is a verified carbon unit, VER, voluntary emission reduction, CER, certified emission reduction, REC, renewable energy certificate, or any other that is currently available? Once you know the credit you want to receive, then step two will be much easier. Finding the appropriate standard body is heavily dependent on the type of credit you choose. So for example, if you want a VCU, you'll have to use Verra as your standard body. Steps 1 and 2 are interchangeable. So if you know what registry you want to use, then you'll know what credit you'll be receiving. Step 3 is to look through the registry's website and look for their list of methodologies. To the right, we see a list for Verra. This is a great example of what you'll see when you search for a methodology. And to the far right is CDM's different tabs where you'd click on the methodologies and see their list. You want to choose a methodology that best aligns with your project, especially because these methodologies can be extremely specific. Moving on to step 4, this is when you'll open up that methodology document and familiarize yourself with their applicability, the parameters you'll need to source data for, etc. Now you're ready to start a spreadsheet and create your schemas. You're going to want to keep an eye out for external tools you'll need to reference. For example, in VM42, there was a CDM tool that was required in order to calculate a certain parameter. Next is creating a workflow, which will help you understand the steps that you need to take, who's going to take those steps, so the different roles involved in the project, and what questions you'll be answering, like who, what, and when. Lastly is building a policy for the Guardian. Now we're going to have a short introduction of VM42 and go over what we'll be talking about in today's webinar. VM42 is a methodology for improved agricultural land management that quantifies greenhouse gas emission reductions and soil organic carbon removals. During today's webinar, we'll begin with a brief recap of VM17, which we previously broke down in a dedicated YouTube video, and the link is going to be shared in the chat. Then we'll look into the crucial topic of soil organic carbon, exploring why it's so vital. Next up, we'll conduct an in-depth analysis of VM42 before moving on to compare the methodologies of VM17 and 42. Towards the end of the webinar, we'll introduce you to our policy differentiation tool and demonstrate our Managed Guardian service. So going into the recap of VM17. VM17 provides guidance on the adoption of sustainable agricultural land management practices, including ways to store more carbon in the soil, like using certain types of crops or adding trees to the area. The methodology aims to enhance soil health and productivity, reduce greenhouse gas emissions, and promote sustainable land use practices. The methodology also includes monitoring and reporting requirements to ensure that the expected benefits are achieved over time. And this approach considers greenhouse gases such as methane, nitrous oxide, and carbon dioxide that arise from various sources, including fertilizer usage, nitrogen-fixing species, biomass burning, and the combustion of fossil fuels. So here we have our VM17 schemas. This is going to be shown in that link that was added in the chat. So if you're interested, you can view it and get a little more information on what we covered for VM17. Now we're moving into an analysis for VM42, which is the methodology for improved agricultural land management. But first, I want to go over what is soil organic carbon. Soil organic carbon is a crucial element in maintaining soil health and fertility, as well as playing a vital role in enhancing agricultural productivity and mitigating climate change. Verra's methodologies VM17 and 42 concentrate on enhancing agricultural land management practices to increase soil organic carbon and decrease greenhouse gas emissions. The importance of soil organic carbon has grown significantly in the climate change discussions, especially in the area of land use and agriculture, and it has been a subject of discussion in various COP meetings in recent years. At COP23, carbon storage in soil was acknowledged as a strategy for combating climate change under the United Nations Framework Convention on Climate Change. And on the right-hand side of the page, you'll find an image outlining the various practices that can influence soil organic carbon. Reforestation is one of the activities that can be done in forest areas, while cover cropping is a common practice in agricultural lands and grasslands. Wetlands, on the other hand, can benefit from activities such as peatland restoration. So VM42 has 3 different quantification approaches. But before we start there, I'm going to do a little explanation of VM42. VM42 is a methodology for improved agricultural land management that focuses on reducing greenhouse gas emissions and increasing soil organic carbon through the implementation of specific practices like reduced tillage, cover cropping, and residue management. So when we move into quantification approach 1, we have measure and model. The measure part of the measure and model quantification approach means taking actual measurements of things that matter, such as how much carbon is being stored in the soil or trees, or how much pollution is being prevented by doing a particular activity. For example, in a forestry project, we might measure how much carbon is stored in the trees or soil, or how much wood is being used for fuel, in order to calculate how much pollution is being reduced or removed due to the implementation of the project. The model part of the measure and model quantification approach means making an educated guess about how much pollution would have been produced if we didn't do the mitigation or sequestration activity. This is called the baseline scenario. We use a computer program or other tool to make this guess, taking into account things like the local climate, how the land is used, and other important factors. So the flow chart demonstrates that approach 1 is represented by the green boxes. While the text on this image may be unclear, the number of boxes for each approach is what we should focus on to comprehend how the schemas will be impacted in terms of length. In this flow chart, all the white boxes signify the equations that must be used for all quantification approaches, whereas the gray boxes correspond to equations related to an external tool. Approach 2, which is measure and remeasure, you're going to measure for your baseline scenario and then remeasure for your project scenario. Now we could look at all the orange boxes in the flow chart as these represent all the approach 2 specific equations. The default calculation approach is a simple way to figure out how much pollution is being reduced or removed by the activity. It uses assumptions that are based on what usually happens in similar situations, as well as information from scientific studies or other sources. Lastly, we have the blue boxes, which are more numerous than any other approach. This is because approach 3 doesn't rely on any modeling software, causing the schemas to be longer in length. We're now transitioning into providing further details on the approaches and the greenhouse gas sources that are considered for each approach. On the left-hand side, there's a table taken from the methodology that displays various greenhouse gases, including carbon dioxide, methane, and nitrous oxide. The sources for these gases are listed next to their respective names. For carbon dioxide, these sources are soil organic carbon, fossil fuels, and woody biomass. Methane sources include soil methonogenesis, enteric fermentation, manure deposition, and biomass burning. Finally, nitrous oxide sources consist of nitrogen fertilizer usage, nitrogen fixing species usage, manure deposition, and biomass burning. The appropriate sources are marked with an X to indicate which quantification approach will account for each source. So monitoring is an essential aspect that is extensively covered in this methodology. I've provided 2 examples to demonstrate what the methodology requires. On the left-hand side, we have parameter AR, which refers to the weighted average adoption rate. The table indicates which equation should be used to calculate this parameter. And as we move further down, we see the frequency of monitoring and recording. For this parameter, the frequency of monitoring should be on an annual basis, which means that the parameter AR needs to be updated once a year in our Guardian monitoring report. On the right-hand side, we have parameter L, which relates to the type of livestock. The frequency recording for this parameter is every 5 years or before each verification event if the project has a duration that is less than 5 years. So in the Guardian monitoring report, we should update parameter L every 5 years or before a verification event. Now we have the workflow for VM42, which will help us in comprehending what needs to occur, the order in which it needs to happen, and the roles that need to be performed. The project proponent is illustrated in blue, while the standard registry, in this case Verra, is indicated in orange. The validation verification body, which we'll refer to as the VVB, is represented in green. So let's go through this workflow. We'll start with the first box to the top left, and it's the project proponent, which will prepare and document the project description and submit to Verra. Then Verra will add the project to the project pipeline and submit project documents to the Verra project registry. Now we have the VVB. They'll assess and validate the project description and provide a validation report. Now the project proponent conducts monitoring, sends monitoring report to VVB. The VVB will review and deliver verification report, a verification representation, and a verification statement. Then Verra will review the VCU issuance request, and Verra will deposit VCUs into the account and record it on the registry. So we're going to move into the schemas for VM42 before we move into a comparison. So at the very top, we see the required fields, schema type, which could be string, name, address, phone number, email. As we move down, we'll see a lot of number schema type. Then we have question if we allow multiple answers, and finally our answer. When we see these gray divisions, those are the different schemas. So we start off with our first schema, which is project details. This is going to get all the information like their name, address, phone number, email, references to any methodologies that were used for this. So if you're using an external tool, this is where you'll list it. Description of the project area, their crediting period, monitoring period, what carbon pools are we looking at, which GHG sources are we looking at, and what monitoring plan is being used. Then we move into our baseline emission schemas. We have our baseline from fossil fuel combustion. The green is an auto calculate field, and then what's under it is going to be what's being used in that auto calculate. Although there are some that are more dynamic and are pulling parameters from different schemas. Now we have our baseline emissions from livestock enteric fermentation, baseline emissions from manure deposition, baseline emissions from biomass burning, and these were all the ones we mentioned in our presentation. We have emissions from nitrogen fertilizer and nitrogen fixing species. Baseline removals from woody perennials. When we move into the demo, this is the information that we would normally be inputting, but for the demo purpose, we'll be using random numbers. Then we move into our project emissions, and this is going to be all the ones that we took into account for our baseline, but we're using the data from the project now. And as we go down, we'll go down to leakage. Leakage was mentioned within the methodology, so we do have to take that into account. And then we move into our emission reductions that are separated by the type of GHG. So we have our carbon dioxide, methane, nitrous oxide, and finally we have the calculation of VCUs, which is coming from the estimated net GHG emission reductions and removal. And this is specific to the year that we're calculating for. And then we also have our buffers and our uncertainty. So going back to the presentation, now we can do a comparison of VM42 and 17. VM17 is designed to promote the transition to sustainable practices, while VM42 is aimed at providing support to farmers who are already implementing some or all of these agricultural practices. This distinction is what causes significant differences in the schemas. In this example, we have our VM17 schema, which shows the parameter for the baseline emissions and removals. You'll see a lot of zeros and values close to zero next to them. This is a helpful illustration to explain why fossil fuels in agriculture management have a zero value, which is because the farmers in the sample projects we used to create these schemas were not using any machinery. This is acceptable in VM17 because this methodology emphasizes the adoption of sustainable practices. If we were to examine the project scenario emissions, we would begin to see values that were not present in the baseline. We could even consider the scenario where the farmer did not use that land before the project was implemented. The land may have been gradually deteriorating, but as they adopt this project, they also adopt sustainable agriculture practices that they could now apply to this land. In the VM42 schemas, we observe values right from the start, indicating that these farmers were already implementing certain agricultural management practices, such as the use of machinery. However, as they adopt the project, their project scenario emissions would benefit from reduced usage of gasoline or diesel in their machinery, which would therefore help reduce their emissions. And here we could observe the workflow once again. Now we can conclude that the workflow for VM17 and VM42 will be identical because they share the same registry. Therefore, the differences in the workflow are not determined by having two different methodologies in this case, as they're dependent on the steps required by Verra to issue VCUs. Now we're moving into an introduction, going into detail of the policy differentiation tool. So we've developed a feature called the policy differentiation that allows users to easily compare policies issued by different or the same standard registries. This differentiation feature evaluates policies or methodologies based on their blocks, transitions between blocks, roles, actors, and more. The policy differentiation tool displays a numerical compatibility score and a list of differences, which we'll see when we do a demo on it. The policy differentiation tool is currently in its MVP phase, meaning that it's in its early development, and we plan to add more features to the future updates. So we value the community's input and would really appreciate any feedback on any additional features you would like to see added to this tool. Combining the policy differentiation tool with tagging allows for independent commentary and review of each methodology. So throughout 2023, we'll work closely with the community to further develop these features. We are also building a versatile tagging system within the Guardian that will enable users to create and manage informative tags for various assets and artifacts like policies in the Guardian ecosystem. These tags can be added by any actor with a valid decentralized ID, making it a powerful tool similar to Yelp or Amazon reviews for the carbon market industry. So we believe that combining the differentiation feature with the tagging feature will showcase how creating digital methodologies, or DMRB, can revolutionize the carbon market industry. On the left side here, we're going to start talking about some differences. So if we focus on the left side, there's a table from the methodology that outlines the various agricultural management practices observed in the schemas. If we shift our attention towards the bottom, we'll notice that animal type is circled. On the right side, we can see our policy differentiation tool, which highlights the type of livestock field, and it's in red. This is because on the far right, we have VM17, and the comparable fields type of livestock is missing from that schema since the sample project we selected did not account for livestock. So if it did have livestock in VM17, we would see it on that right-hand side where the red box is, and it would look something like this. So both sides of the comparison tool are now in green, indicating that the tool was able to locate a field that has the same parameter. Project scope is classified under the project detail schema, and for both VM42 and VM17, the project scope is scope 14. Also, we notice that the total rate is 100%, signifying that the fields are completely identical in both schemas. Now we can move into a demo. We're going to start with the policy differentiation tool and then move into how we create these policies and how we input the information. So first off, we can look at the configuration of these. We could go into 42 first. And here we have what would be our technical workflow. This is new to the version of NGS that is using the Guardian 2.10. And we'll be pushing this major upgrade to NGS customers sometime by the end of this week or next week. And if we look at the one for 17, we see that they're the same. And this is like we went over before, our workflows are going to be extremely similar. Only differences are going to be within the schema. So we go back to policies and we're going to see a compare button here. This is how we open our policy differentiation tool. So we could click that, select our first policy. We're going to click 42, so it could be on the left-hand side. and 17. And we would click compare. And now we're seeing it says policies are 93%, but this is not the schema, this is comparing the workflow. After workflow, we'll look into the schemas. So if we click on these, we see policy roles, we have our project proponent, our VVB. The reason why you're not seeing that third role, which is the standard registry, is because we're currently logged in as the standard registry for this demo. Then we go down, there's a tab for policy groups, policy topics. This is where Guardian sends the policy information. When the Guardian publishes a policy, it sends information to Hedera topics, and that's where the information is stored on chain on the Hedera network. Then we have policy tokens, and if we scroll down, we start seeing our policy blocks. Here we have a legend with green that is blocks are equal, including their child blocks. Blocks are equal, but their child blocks are different, so you'll see that green and yellow. And yellow is blocks are the same type and are partially equal. And then we have red, blocks are absent in the other policy. These are also clickable, so if you're looking for something specific, you could turn these on and off. And now we're seeing our workflow. So we could click into some of these. We have choose roles here, and if we look, they're all green, you have 100%. We have our project proponent, our VVB, and again, you're not seeing the standard registry because we're currently logged in as a standard registry. We have mint token, which is really important here. And we're seeing a difference in this one, which falls under rule, and that's because our schemas are different. So on the left-hand side, we have VM42, and on the right is VM17. The calculation that is used within the schemas are going to use different fields to calculate that VCU. So that's why we're seeing a difference here in mint token. And now we could move into our schemas and see how they compare. So at the very top, we see schemas are 42% the same. If we look into some of these fields, we have type of activity. They're going to be the same in both. Those fall under our project details, which are going to be the same, especially since these two methodologies are very similar in that aspect. And as we scroll down, we start seeing more yellows, more reds. We're seeing some on this side that are not on the other side. Let's see, this one, we see that we have one that relates to livestock. Livestock is not on VM17, how we mentioned before, so that's why you're seeing it on the left-hand side, but not on the right. Here we have another one that's having to do with manure deposition. That's not in the schemas for VM17. That's why we're not seeing that reflection over there. And we have another one in manure deposition. So here you're seeing what we have that would not be in these schemas. And this tool is really important. If you're using different standards, you can also compare the two methodologies, or you could compare some that are within the same standard, like we're doing now with two Verra methodologies. So now we can do a demo on VM42, how we input this information and how we mint tokens. So we're in dry run when we mint tokens. This is not going to go on chain. We're going to start off by creating some users. We're logged in as our standard registry, so we're going to have to add 2 more users, our project proponent and our VVB. We're going to click in user 1, and we see that we have roles. You need to choose a role. You could choose project proponent and click OK. Then we go down to user 2. We'll assign VVB and give the VVB a name. Now we see it says waiting for approval. So we're going to go back to our standard registry. Now we're seeing two buttons here, approve and reject. You could also click this document here and see our VVB. We're going to hit approve. And now we're going to go down to our project proponent. We're going to start creating this project by clicking New Project. For this demo, just to get this going a little faster, we're going to input some random information. There's a lot of required fields for this schema because it was so large. So this may take a while. Here we have to input a map. And then we're going to choose our crediting period. So we're going to do a year from now. Our monitoring period. These were some of the fields we saw within our schema. And now we're going into those calculations. So you're not going to see any of the auto calculate fields here. That's done after you click OK. And these are divided by the schema types that we had. So some were manure deposition, some had to do with fertilizer. They're going to be organized in that same way. Now we're seeing fossil fuels. That was another schema we had in our Excel. And then when you see 1, 2, 3, that was because the schema type was number. When we see something that we got a type, it was a string. And now the status says waiting to be added. So this is where in our workflow, Verra would have to add it to the project pipeline. So we're going to our standard registry and selecting project pipeline. We could click add. You could also see the document here, all the information that was just input there. You'll see it reflecting here. You'll also see your maps that were input. You could click add. And now waiting for validation. But before we do that, we have to go back to the project proponent and assign the VVB. And now we could go to our VVB. We'll click on projects, hit validate. And now we'll go back to our project proponent and fill out our monitoring report. This is where you would have to know which ones you have to update annually, which ones you have to update every 5 years, depending on what the methodology asks for. And you got to update your map. Click OK. And then we'll go back to our VVB. They'll look over the monitoring report. They could see everything that was updated if it looks correct. Then they could click verify. If it didn't look right, they could click reject. And now the status is verified, so we can go back to our standard registry. Click on monitoring reports. And now we see that we have a mint button. They could also click this document. We're going to hit mint. Went from status minting till status minted. We go to our token history. And now we're seeing we have one token. And this is where we have our trust chain, which is extremely important. Now you see who played what role. You see the token information, the recipient name, token amount, mint date. At the bottom here, this is what we mentioned in the presentation. You're starting to see who played what role, what did they do, what were they looking at. So you can look at these files. And it goes all the way from the very beginning of our workflow till the very end. So you're seeing user 1, user 2, project validation, monitoring report was created by user 1. That's going to be all the information that we had in here. What you would have to update is going to reflect there. And it would go all the way down till mint VCUs.
Thank you so much, Jaylene. We're going to wrap up here today. Thank you so much for joining again. This is a 6-part webinar for methodology breakdowns. Please note that we encourage community submissions, and there's a whole number of ways to reach out to us. You can reach out to us on GitHub. Go to hashgraph/guardian/issues. You can submit a policy request if you want to see something developed, an enhancement, or any bugs that you happen to find. You can reach out to us on Discord. Go to hedera.com/Discord, look for the sustainability channel there, or of course, reach out to us directly at info@envisionblockchain.com or at www.envisionblockchain.com. Thank you so much, and we'll see you next month.